It's no secret that lots of the world's most wealthy individuals are investing in space, and for good reason. It is the next frontier for our economy. One of the key players in that move is SpaceX, of course, but there are others like Rocket Lab. The company reported earnings after the market closed yesterday, and the stock has kind of been middling, but it is important to note that this stock is down almost 50% from its all-time highs. And so the question is, what should investors take from this earnings report, and what's the outlook going forward? My name is Brian Stoffel. At the time of this recording, I do own shares of Rocket Lab, and we're going to spend the next couple of minutes figuring this out. So Rocket Lab is roughly a $50 billion company, and this was the company's second quarter of 2026. On the top line, revenue grew 61%, which is excellent. It was just ahead of analyst estimates, just barely ahead of the midpoint of management's guidance. They lost 2 cents per share on a non-GAAP basis. Again, that's an improvement from last year, ahead of analyst estimates, and they guided for a loss of $23 million in adjusted EBITDA. They actually ended up just losing $9 million. Now, if we look at margins, gross margins, great. Love seeing this on a vertically integrated launch and satellite or space services company. Gross margins, that expansion from 32 to 36% is meaningful. We'll talk more about it in a minute. But look, this company is still in the phase of trying to ramp up production. And the one thing I haven't mentioned yet, its primary launch vehicle is the Electron rocket, which has very small payloads. It's the Neutron rocket with a medium payload that everybody's waiting for, and that this is what this report really hinged on. We'll get to it in a minute. But because they're so focused on this next generation rocket, they're operating at a loss, and that is not surprising. That said, the operating margins did improve to negative 25% with an improvement in net margins as well. Unsurprisingly, cash outflow has gotten worse as they prepare for the first launch of the Neutron rocket. Net income improved marginally. The balance sheet is in great shape, in part because the company did offer, had a secondary offering when the stock was at all-time highs. Great decision by management. It is dilutive for shareholders. So let's go down the income statement to see what's happening here. Revenue is up 61%, and the cost of that revenue is only up 52%. This is incredibly important because it shows that Rocket Lab has operating leverage and has a moat, and we can see that. So if we look at their product revenues, okay, their products are mostly satellites, components, systems, things like that. What we see is that the product revenues gross margins improved from 33.5 to 35.2. And if we look at service revenues, which are less, like mostly launch revenues, we saw that gross margin improve as well, and meaningfully from roughly 30 to roughly 40%. That's incredibly important. And that is why overall gross profit increased 82% off of just a 61% increase in revenue. Just as important is that those operating expenses were held in check, only up 34%. So put that all together off of a much larger base, the operating loss actually still narrowed 4%. And that's why those operating margins improved so much, and that net loss narrowed as well. Now, as I said, they did have a secondary offering back when the stock was at all-time highs, and so the number of basic and diluted shares outstanding grew 22%. But there's more going on here that meets the eye, and we're going to head on over to fiscal.ai to look at it. So the company breaks out its revenue into two kind of buckets. One is launch. That is the Electron rocket, and HASTE, which is a suborbital release that is usually used for researchers. Launch services is the blue, space systems is the orange. Once the Neutron rocket is launched and gets up to cadence, you will see this blue growing faster. But for now, the space systems, again, which is the satellites, the components, the things that are out there, that is the majority of the revenue. And it's important to look at the growth. Now, if we look at space systems, the growth here is very, very encouraging. You see that it had slowed to about 15% growth, and we have seen a massive acceleration in space systems revenue, which again, for a vertically integrated company, is really, really important. So that came in at 93%. Now, some people might look at the launch revenue shrinking 4% and really get worried about that. But on the call, management said this really has to do with the difference between Electron launches and HASTE launches. Again, HASTE launches largely for researchers, and the way that those are monetized is different. With the Electron, when the rocket goes up, they get paid right away. With HASTE, it comes in tranches. And the fact of the matter is, most of the tranches were met in prior quarters, so they said this is not a huge thing to worry about. So that's the revenue side. But just as important with such a capital-intensive business is gross profit. And so what we see here is that gross profit for space systems is in the yellow and gross profit for launch services in the red. Again, that's going to be undergoing some change as we see the Neutron get launched. But first, what I want to show is launch services gross profit up 35% is actually pretty good. We saw the main leverage coming through right here, but since many of the launch services this has to do with the HASTE in these prior quarters were elevated, and it came down to just 35% in this quarter for gross profit growth. But if we look at the space systems gross profit more than doubling, again, this is a sign that we are really seeing some leverage in the vertical integration that Rocket Lab has done the hard work of building over time. Now, probably the most important thing to watch is the backlog. Okay, so we have a backlog for launch services and a backlog for space systems. And it's important that we start talking about the Neutron now, because management is taking orders for payloads to go up on Neutron. For instance, Kepler decided to get a full launch on a Neutron, and that will be going out once Neutron proves its feasibility, and that is starting to show up in the backlog. But the space systems is no slouch either. So you can see that it's nice to see the launch services backlog growing, but you also see some incredible growth from the space systems as well. If we look at launch services, that backlog has been more than doubling year over year for the last 2 quarters. Again, a lot of that does have to do with the Neutron launch. If we look at the space systems backlog, that's been looking amazing too. It's been more than doubling over the last 3 quarters. So again, this is some real positive momentum that the company has going. Of course, there are some tuck-in acquisitions that help here, but that is the playbook that you have to run if you're a vertically integrated company, and with $2.3 billion in cash and no debt, they can afford to do that. Now, I want to go over what the guidance was, because that was largely positive as well. Management guided for a midpoint of 66% revenue growth in the current quarter, and that's well ahead of what analysts were expecting. Earnings guidance largely in line. They did say that they would be less profitable than they thought they would, so they're now calling for $20 million outflow in adjusted EBITDA, largely to get ready for that first Neutron launch, again, which I'll comment a little bit more about in just a minute. But first, I want to talk about what I am watching as a shareholder myself. Number 1 is that Neutron launch date. The window for that launch is narrowing. Number 2 are gross margins. Love seeing the progress on the gross margins. Now, it might take a step back once Neutron goes live, because many of the expenses are going to flow from R&D to the flight and launch services itself to inventory, and ramping up can be hard. So understand that that's coming. And 3 and 4 is just keep an eye on the launch backlog and the service backlog, because to me, the expanding margins and revenue cadence definitely shows that the moat is widening. It's becoming the number 2 option to SpaceX to get things out in orbit. And I am cautiously optimistic. And that's where we'll pause and we'll talk about the Neutron launch, because really the Neutron launch is the ball game if you are investing in Rocket Lab. The idea here is that they've clearly proven that they can get these rockets in air at scale, on time, at a great cadence with Electron, but Neutron really does change the ballgame. And because they're going to be acquiring Iridium and its network of satellites and L-band spectrum services, the ability to get things up in the air, maybe refurbish that whole constellation over time, is really important. But mostly, as CEO and co-founder Dr. Peter Beck said on the conference call, launch has never been so constrained as it is right now. There's only so many players you can go to get something up into orbit, and the demand is fervent. I mean, this does share some shades of the type of AI demand we've been talking about. And so getting this Neutron, showing that it can get up to launch, is really important because it proves some feasibility. But Beck said on the call that they are taking a slightly different approach, whereas before they were doing everything that they could to make sure that first Neutron launch made it up and was successful before the end of the year. They've now said, and they've said this before, that it might have to be pushed out to 2027, that everything should be on the launch pad by the fourth quarter of 2026. But the reason for that delay is important to note. And it is because they want to make sure that they can get from one successful Neutron launch to 3 and 5 and 10 as quickly as possible, so that they can take advantage of that incredible constraint of launch and the incredible demand that they have. And they talked about how if they can do this successfully, their selling prices for those launches could meaningfully increase as well. Look, the way to think about this, if you want a sports analogy, is that you could rush your star pitcher back from having surgery, or you could take time to let that star pitcher really build up his or her endurance and then make a deep push into the playoffs. What Peter Beck is saying is, look, we want to make sure that this is not one-off. We want to qualify all the parts, all the systems necessary to make sure that when this first launch gets up successful, the second, third, fourth, all the way to the 10th can get up as quickly as possible. There is a trade-off because investors need to be patient, and it makes that first launch being successful even more important. So the question is, what do we think about the stock, where its value is today? Well, before I get to that, I just want to point out that if you enjoy content like this, you'd be a perfect candidate for my program, Stock Investing Mentor. It has 3 pillars to it. First, you get real-time access to my real-life portfolio, which is 90% of my family's net worth. Second, you get access to the antifragile stock universe, where every stock that I own and cover is ranked by antifragility and valuation, including a top 5 every month. And third is 1 hour of live training every week and 24/7 access to a private online investing community. By the way, if you sign up, you will also get Stock Simplifier Pro, a $400 value, absolutely free. So if that interests you, top link in the show notes below will get you 10% off an annual membership. Now you might be wondering, what is Stock Simplifier Pro? Well, I pulled it up right here for Rocket Lab, and you can learn about the business, its moat, which by the way, our tool thinks is widening, its growth potential, which it thinks is very high. But I'm going to go to the valuation because look, there's a lot of moving parts with Rocket Lab, and so it's important to understand, well, how might these moving parts kind of develop over time? If you consider the launch services, the space systems, and then also the Iridium acquisition, and you think about, well, what could this company look like in the future? Well, I think it's important that we give it an optimized free cash flow margin. Because look, right now, the company is definitely not producing free cash flow, which is to be expected. But that makes it really hard to value. Now, I think that the mix of these things, conservatively, we can put at about 20% in the future. So if the company was getting a 20% free cash flow margin today, which they most definitively are not getting, to be clear, then we give the company a 3% terminal growth rate, because I think the company has a moat and it has pricing power, well, then what this says is that, all right, well, Rocket Lab needs to grow its revenue by 45% per year for 10 years. That's an incredibly high growth rate, assuming that they get these 20% free cash flow margins. Let's compare that to what analysts expect moving forward. And to do this, what we can do is we can just pull up revenue growth rates, and we can pull this up on an annual basis, and then we can pull it forward to say, okay, over the next 3 years, what is the company expected to do? And the answer is that the company is expected to grow by 53%, then 40%, then 33%. But it's also worth pointing out that we need to check out, well, have these analysts been right? Have they been wrong? I would say that they were downgrading some of these as the Neutron got pushed forward, and they've largely been flat since then. So we could take them at face value that then we expect revenue growth over the next 3 years to average, let's call it 40%. So if we go in here and we say over the next 3 years, we expect revenue to average, let's call it about 42% per year. Boy, that revenue, that bar is still very high. That means that the company needs to grow at about 47% per year from year 4 through year 10. And what does that all hinge on? Again, it all hinges on the Neutron rocket being successful and getting up to a high cadence of launches so that the company can grab market share and help alleviate some of that constrained launch environment. That's what this bet is essentially on. Let me know what you think of Rocket Lab and what the key parts are moving forward in the comments section below. Until next time, Brian.